And Brett, one thing I just want to mention that, of course, I caught in your Q&A, and it was just another good nugget takeaway from it, is that even if somebody was still interested in doing a 1031 despite this, you mentioned, of course, they could plan ahead of time when they interview their QI to make sure that language could be put in to effectively revert to the DST if the 1031 failed.
Yeah, we have a 1031 fire plan, and so we have a whole program. It costs you $1,500. That includes the 1031 qualified intermediary. That includes our services to make sure that nothing hits the fan, that everything is mapped out properly. Okay. And so, yeah, if you just email me, we have that company ready to go. The downside of using the ones that don't know what they're doing is they don't know what they're doing, right? So just be careful with that, right? And if you're like really adamant to use your guys, okay, well then let's just get with us early. Make sure they actually have the proper language in the exchange agreement, right? But guess what? Most qualified intermediaries, they don't want you to know about this. Some of them will tell you it's not legal. It's not legal, and they'll scream it like they've seen the documents and they've done the deals. And they'll reference a California franchise tax board memo that was released about 2 years ago, saying, the one guy on the blog, you look him up, he's like, see, it's illegal. And like, no, we do like probably half our deals are in California. Like we've never had a negative result in California. It's been perfect for 25 years. I mean, thousands and thousands and thousands of closes. But there was a memo released by the franchise tax board that told qualified intermediaries that installment-like structures, right, if they're not holding back the withholding that's due to California, that is a penalty. And we always hold back if it's a California deal, right? But these qualified intermediaries is like the drive-by media, right? They grab this and they go, see, it's not legal. It's like, well, first of all, IRC 453 is an installment sale. It's a federal tax law. Number two, California it's not a federal tax law. It's California, right? Number three, they didn't send this to investors. They sent it to qualified intermediaries that weren't cooperating and holding back what was due to California. So that just everyone knows. You're going to look this up, and your CPA might do a little search, and these are the objections that are going to come up. But just get them with us. Have them come with us. Also, the tax attorneys provide lifetime audit defense. So a part of that one-time fee up front is lifetime audit defense. So state or federal, it's included for the life of it. No additional charge to you. They will cover all of the legal cost. And so that's really important, because if anyone's coming to you with a brand new strategy, you got to make sure that it's been proven, tested by the fire, and the tax attorneys who set it up are the ones that are defending you. You don't want to be going with somebody who doesn't have that track record, right? We have that. We also have national law firms that review this and said yes. In fact, we just had a deal, an $8 million deal for a client who's selling a business in Southern California. He sent the franchise tax board notice. He sent all the stuff he could. He's like, you guys, all of it sounds legit and good, but I want a third party that I'm going to find. Can I go find that person? Sure. And he goes, I found an former IRS agent, tax attorney. And I go, as long as he signs the NDA. And so over about a 60-day period, he worked directly with the tax team who've created the Deferred Sales Trust. And over about a 90-day period, he gave it the thumbs up. And so we have those references, but we're not going to give our secrets away, and we're not going to, we don't want competition, but we also don't want people to mess this thing up. So we're going to protect what we have, if that makes sense.